Time for business. Owen Fairclough with us here on set. We're going to start with Greece fast running out of friends in Europe.
And if things continue the way they are, Stuart, money as well, you can add to that list. 1.2 billion euros withdrawn from Greece on Monday and Tuesday alone this week. Doesn't sound like an awful lot, but when you think in an average month, you might see around 2 to 3 billion euros withdrawn from Greek banks. You begin to see the picture. I don't think we can quite call it a full-scale panic run on banks yet, but if things continue as they are, it's quite possible that Greece will effectively run out of money within the next 3 months or so. It's got around 165 billion euros. When you do the maths, you can see Greece cannot sustain those kind of withdrawals, certainly over a long period. The other problem right now is that nobody really seems to want to help Greece out, particularly the European Central Bank has been basically keeping Greece afloat with various loans, various funding. There is a 25 billion euro pot set aside for Greece as part of that second bailout. That's supposed to fund the banks to keep the liquidity going. The problem is the European Central Bank has effectively frozen that. It's so concerned about the deteriorating situation there.
And even the ECB all but given up any optimism at all about Greece, do you think?
Yeah, at the start of the week, we had a leading EU finance minister dismissing any prospect of Greece exiting the euro as propaganda and nonsense. And yet, Mario Draghi, the head of the ECB, the best he can say right now is that it is his strong preference, in his words, for Greece to stay within the euro. Hardly a ringing endorsement of that country. And yet he knows that ultimately it is up to the Greeks to decide whether they want to stay in or out of this country. On a slightly bigger scale, it was left to David Cameron, the UK Prime Minister, to spell out what he thought would be the potential consequences of Greek exiting the euro. He thinks it would be the end of the eurozone itself. Here's UK Prime Minister David Cameron.
If the eurozone wants to continue as it is, then it has got to build a proper firewall. It's got to take steps to secure the weakest members of the eurozone, or it's going to have to work out it has to go in a different direction. It either has to make up or it is looking at a potential breakup.
That's Britain's Prime Minister spelling out potential consequences of the current crisis. It's been a rotten week, of course, on the markets. We have got some good GDP numbers helping Asia.
A big surprise to you. Japan is growing. Yes, I repeat, Japan is finally growing. The first quarter figures, GDP was up by 1% on an annualized rate. That's 4%, which beat expectations. Add to that as well, Singapore's economy growing by an impressive 10% in the first quarter, and you can see there the positive effect that has had on the markets. The Nikkei did start the day in the red, has managed to lift its chin above the bar a little bit, and you can see the knock-on effect across the Hang Seng and the Shanghai Composite. Don't be fooled though, those markets are likely to end the week substantially down with those accumulated losses from all of this eurozone woe.
Now, new French President François Hollande has named his team, arguably the man who's inherited the in-tray from hell, Pierre Moscovici. He's been named finance minister. Balancing a ballooning budget is only part of his brief. He also has to find a way to make the French economy leaner and meaner. Here's Shirley Sitbon.
François Hollande gave his new finance minister a mission, restarting the economy, but not through austerity. As Pierre Moscovici takes on the job, France's industries are less competitive than the European average, and less than Europe's first economy, Germany. Working costs in France are about 13.6% higher than in Germany, and the French president has no intention of making work more flexible. On the contrary, Hollande wants to preserve workers' rights, increase minimum salaries, and end the tax breaks granted to companies by his predecessor Nicolas Sarkozy. Hollande says he'll boost the economy by a redistribution of wealth.
In concrete terms, growth comes about by helping families pay their bills. It comes about by creating jobs in the public sector and by tackling unemployment with more social policies. It happens through not cutting so many public sector jobs and by financially helping low-income families.
Although Hollande wants to balance the budget by raising taxes on companies and the rich, he insists he's not against business. All the ministers he chose to head the finance, budget and work ministries are moderates. He created a ministry devoted to improving French industries and vowed to create an investment bank and give more money to research. To finance these measures, France will have to borrow more money. Its borrowing costs are now twice as high as Germany's. The new finance minister is a devout European. Twice MEP and former European Affairs Junior Minister, he plans to sell Hollande's growth strategy to countries across the EU.
OK, let's pick up on a little bit of the day's company news now, starting with Total, which has plugged a gas leak in the North Sea nearly 2 months after it first erupted. The French oil producer says it pumped heavy mud into the breach of the Elgin platform off Scotland's coast to stem the flow of gas. Credit rating agency Fitch has previously estimated the total cost of the accident to be around €5.7 billion.
Berlin's new airport isn't likely to open until March next year. That's according to sources quoted by Reuters. It means the German capital's new €2.5 billion hub will have pushed back its opening by nearly a year from its original date of 3rd of June. Problems with fire regulations to blame for the latest setback, on top of delays with installing automatic security systems.
And US sports shoes maker Skechers has paid $50 million to settle misleading claims about its latest line. Trade authorities said Skechers' claims that toning shoes would help wearers get stronger and lose weight were unfounded. Skechers had denied the charge but says it settled to avoid a lengthy legal battle.
Now next, it's already big, it's getting even bigger. Facebook's route to its debut on the stock exchange this Friday hasn't been smooth, with questions about its advertising business model concerning investors, but its valuation keeps getting bigger, with some estimates suggesting up to $18 billion of stock will be sold on Friday. That would give the social network a market capitalisation of well over $100 billion. Nicholas Rushworth has more.
There are over 125 billion friendships on Facebook.
Mark Zuckerberg, the founder of Facebook, likes big numbers.
There's 2 billion likes.
He crunches them in his ads, and in the run-up to Friday's initial public offering, he's upped the value of his company's shares, implying Facebook is now worth $100 billion for 900 million users. One analyst argues that's an underestimate.
If you look at, say, 900 million users, let's just say pie in the sky, it grows to 1 billion and stops. 100 billion is saying that these users are worth $100 a piece over their lifetimes. So you're going to monetize $100 worth of ads over their lifetimes. That's pretty low.
But others are asking, what is Facebook really worth? One of the world's top investors, Warren Buffett, said earlier this month he's not buying because it's too hard to estimate its value. One company also querying the business is car maker General Motors, which on Tuesday said it wouldn't pay to advertise on the Facebook site anymore. It's not convinced the company's ads work. The challenge is for Facebook to show it can grow and turn its user base into a platform for highly targeted advertising.
You got to believe there's no reason they shouldn't distribute ads. That's what Google makes a lot of their money that way. And, you know, if you can target ads for your website partners as well as on your own site, that's a really big business opportunity.
The frenzy surrounding Facebook stock is intense. That hype will peak and Zuckerberg will have to show it was justified.
That's the business for now. That's the news for now. In fact, Owen, thank you very much. More news coming up really shortly with Lorna here on France 24. Stay with us.